Turkey's annual inflation rate jumped to more than 36% in December. That's the highest level in almost 2 decades. The value of the Turkish lira has slumped to record lows, forcing retailers to hike prices sharply. The currency has suffered as a result of a series of central bank rate cuts forced through by President Recep Tayyip Erdogan. Let's get more on this from Rob Watts from DW Business. Rob, just how severe is the problem in Turkey, considering that there are inflation worries at the moment all around the world because of COVID, but how much more of a worry is it in Turkey right now?
Well, it turns out it's an even bigger worry than anyone had thought. No one was expecting, certainly analysts weren't, a figure of 36%. They converged around sort of 27%. They weren't expecting it to cross that 30 mark. These are the worst figures in Recep Tayyip Erdogan's time in power. So it's a really serious situation. And the key driver behind it is the problems that Turkey is having with its currency, the Turkish lira, which has lost almost half of its value during the course of the year of 2021. It started the year at 7 to the US dollar. It's now around about 14, although at one point during last month it hit 16 to the US dollar. And, you know, when you've got a weak currency, what that means is expensive imports. And expensive imports, more costs to, suppliers, means price hikes get passed on to consumers, and it means their food starts to get more expensive. And that's something that Turks are really seeing.
So what's being done to get things under control? Because it sounds like it's quite counterproductive what Mr. Erdogan is doing.
Yes, that is the strange situation that Turkey finds itself in, which is that the president has an economic policy that he thinks is going to bring about a new lease on life for the Turkish economy, but it would appear to be actually this policy is the cause of most of Turkey's problems. So what he believes is that high interest rates cause inflation, right? Which is against the received wisdom.
Exactly.
So he's been pushing for lower interest rates, and he's been sacking central bank governors who disagree with him on that. He's sacked 3 central bank governors since 2019. Now, as I say, the received wisdom is that actually what you want to do is you want to raise interest rates, and as a result of that, what you do is you get people to save a bit more and they're spending less, and that stops prices rising. But no, Recep Tayyip Erdogan doesn't subscribe to that. He says his big economic plan, what he calls his economic war of independence, is eventually going to bear fruit, and that Turks need to be a bit more patient with it. OK, well, while Turks have to hold out, you mentioned their savings. What's happening to their savings at the moment? What are they doing to ensure that their savings don't disappear? Well, yeah, this is the problem, because their savings are becoming worth less and less and less. So what can you do when that's the situation? If you've got a problem with your currency, well, you can start getting hold of other currency and using that instead, but that's not really an option for a lot of Turkish people. Another thing you can do is you can invest in safe haven assets, things like gold. And that is something that we are seeing. Gold merchants in Turkey saying they're having to sell in ever smaller denominations, ever smaller pieces of gold, because so many people want to buy them because the price doesn't fluctuate too much. And those are the sorts of things that Turks are having to resort to.
Hard times right now. Rob Watts, thank you very much for filling us in.